to an improvement in the execution for FY25. But looking at the sectoral opportunities, tailwinds, and execution, how should we look into the FY26 at the current juncture for the Sterling Wilson?
So, see, we expect to open this after achieving 8,000 crore of order book this year and achieving the revenue. So, you can expect that we'll be opening new year also close to 8 to 10,000 crore and similar amount of order booking in that particular order. So, as on conservative side, excluding Reliance and Nigeria, we can still grow at 15 to 20% CAGR annually on a very, very conservative basis.
Okay. And sir, just a final question. If you can also give some, just wanted to seek some clarification on the recent sale of shares by the promoter, especially in the context this year we do not have the indemnity clause liability from the promoter. So if you can give some clarification on that part, that would be really helpful.
So as you must have read in papers, our most active promoter, Mr. Kharshid Daruwala, has reiterated his position that he's going to continue and he's a long-term investor in the company and he's going to be there and there is no plan of any further shares by him. So for all other promoters, I will not be in a position to comment, but because Mr. Daruwala has stated publicly and this article has been published in all the major newspapers across the country, that he is going to be there and he's reaffirmed his commitment to be the long-term player in the company.
Okay. Thank you. Thanks a lot and wish you all the best. Thank you.
Thank you.
Thank you. The next question is from the line of Gautam Gosar from Monarch AIF. Please go ahead.
Hi, sir. Thank you for the opportunity. So my question is basically on execution. So since majority of our order book is domestic, I basically wanted to understand how is the progress going on in the Khavda region as well as in the GRPCL. So majorly we won these orders 1 or 2 years back, and these orders are of big size of around 5,500 plus 1,100 crores. So if you could highlight how the execution has been going on, how much is executed and what is the expectation for the year, it would be really helpful.
Yeah. So as far as the Khavda portfolio is concerned, we are well on track to deliver as per the contractual timelines to the client. There have been initial some delays in the supply of modules. Projects are on track. And as I discussed earlier in the call, that we expect to complete majority of the Khavda portfolio in this fiscal year. And before the monsoon, the entire construction of the entire Khavda portfolio will be completed. So that's where we stand. In addition to that, the other portfolio, majority of the IPP portfolio, private IPP portfolio, which is in Rajasthan, will also be delivered before March, so that we can achieve a revenue of 8,000 crore in this fiscal. So all the projects, execution plan has been put in place, all the engineering is complete, orders on the suppliers have been placed. So we are well positioned, all the teams have been mobilized to the project sites. So we are very, very well positioned to execute all the projects as per committed timelines and to achieve the revenue of 8,000 crores this fiscal.
Okay. And sir, are there any orders in the order book which are yet to start the execution?
So yes, we received one order last night. Yesterday, the one order was received from NTPC. So just LOA has been received. That will be started now. But as soon as we get the orders, the engineering and ordering on that orders start immediately. So there is no order like that. That's what our strength is, that we are very, very nimble on execution. So before once we feel that we are in the final stages of getting an award, the team start working on the order, and as soon as we get the orders, engineering and procurement action start taking place on immediate basis. So there is no other order except which was received yesterday. So we have progressing well as per the schedule on all the projects or orders backed by us.
Okay. Thank you, sir. That's it from my side.
Thank you. The next question is from the line of Bhavik Shah from MK Ventures. Please go ahead.
Yeah, hello sir. Good morning. The first question is on the Nigeria project. Are we facing any challenges there? Is there any chance of the Nigeria project not going through, or is it just delay due to the bureaucracy?
No, actually, we are Nigeria project is on track. and it is definitely coming. So there is no question of cancellation of Nigerian order. Just to give a background, the Sun Africa, our partner, on this model, they have already signed 2 projects in Angola, and this week they are going to sign one very big order in Serbia. So there were some, as you know, there was some particular domestic situation in Nigeria on their political front, which it got we were expecting it to sign it last month, but somehow it has got delayed. But we are expecting it to get concluding very, very soon. The negotiation has been completed with NDPHC, and their new board also has approved the project. So there is no uncertainty about the project. Project has big support from the US government as a part of their various renewable energy and support Africa initiatives. So there is no uncertainty about the project, and we are expecting to happen it very, very soon.
Got it, sir. And so this was the final tranche of indemnity, right? No further amount is expected.
No. Indemnity tranches, I think Sandeep will share more details, but they will materialize from next 24 to 36 months. As and when the sums will get crystallized every year, the promoters will pay as per the crystallized amounts.
Okay. So what is the amount you can expect over the next, say, 12 months, approximately?
I think I will pass it on to Sandeep to share the exact figure.
Gautam, so right now what we have indicated is that 109 crores has been billed as of September 30th, which will be received by 30th of November, right? So that is the amount that is going to be received by us in this particular quarter. Now, over and above this, there are multiple cases which are essentially in various stages of settlement. Some of them we are trying to look and settle with the client. In those cases, we will be able to achieve faster closure, in which case we will either receive the amounts from the client directly, or like we have always indicated in the past, the promoters are finally just backstopped it. So so if it's not from the client and the settlement happens, then the promoters will come in and backstop. Now, if we take the legal route, however, and go through the arbitration process, those tend to be slightly more time consuming. And that is why we have said that, for full crystallization of the 800 odd crores, which are still money that we are currently cash out in, it could take a period of 24 to 36 months for full realization of the amounts. It's very difficult to put a number at this point on what will exactly crystallize in the next 12 months, apart from what has already been billed to the promoters.
Got it. And so what is the interest rate on the loan we have taken from IREDA?
About 11.6%.
11.6%. And so last question. So how are our margins on the RIL pilot project? What kind of gross margins do we have there?
So margins are the same as we are like the project of similar nature in the market. So our margin on Reliance also aligned with the margins of similar projects in the open market.
Okay. And so say for FY26, do we expect our gross margins to improve from the current levels?
Yes, we do expect to improve, because overhead is practically, we have stabilized the overhead and we are continuously working to improve the overhead numbers. But revenues will go up significantly, and rather I would say not affect, even the next quarter onwards, revenues will be ramped up significantly, and you will see better, like the gross margins will remain same, but EBITDA numbers will improve significantly going forward in all the quarters.
Okay, got it.
Gautam, just to add, I think on the domestic projects, we have already indicated that we will be targeting the 10 to 11% gross margin range. We have our O&M projects where we have said that the target steady state margins are around 25%. So those are numbers that we have already indicated to you. That's where the gross margin number will be. I think on an EBITDA margin front, since overheads are likely to remain the same, once you have higher revenue, there will be operational leverage that could kick in, and your EBITDA margin therefore may replace significantly. That is what has to be noted as we go ahead.
Yeah, so one question, 7.8 gigawatt of O&M portfolio, can we ramp them to what gigawatt in say FY26?
So roughly more than 8 gigawatts of project under execution. And if we say like in FY26, majority of them will be commissioned, and in addition to, on top of that, there will be third-party orders. So all that will be added to our O&M portfolio.
Okay, sir. Okay. Got it, sir. Thank you so much.
Thank you. The next question is from the line of Mayank Chaturvedi from HSBC Mutual Fund. Please go ahead.
Yeah, hi. Thank you. Good morning, sir. So just on this strategy change, now that we're going for more turnkey projects, though it is largely from PSUs, and I understand that the prices for the modules in the Indian context are pretty much stabilized post this ALMM rollout that has happened. But how are you thinking about a possible price decline that might happen with the capacities that are coming up, and how are we protected in the turnkey orders that we are taking up from these PSUs? Because we have already suffered before, so I'm assuming that.
So there is one major change in strategy, because earlier the modules for the turnkey projects we are taking, we were procuring in international markets from China. Now we are buying all the modules from tier 1 Indian suppliers. So the contracts are very, very strong with Indian suppliers, and they are enforceable. Second, our relationship in the market is strong, and we are firming up our orders with the module suppliers immediately, very, very soon after we are receiving our contracts. So we are not taking any risks there, so we are back-to-back protected. So as soon as we get our contracts, we are on that basis and those price levels prevailing in the market, based on which we have submitted our bids, we are finalizing our orders. So there is no speculation there, and we are not exposed to any risk. And even either the rise or fall in the module prices does not impact our business models, because bids are submitted on prevailing module prices in the market.
Okay. And this the turnkey projects are only restricted to PSUs, or are we also extending that?
Right now, the market model in India is such that they are being floated by PSUs only. So far, no IPPs are not coming out with, they are not asking for module supply from EPCs. But if they come out with that, we can strategically, at that point of time, we can take a call. But as of now, it is restricted to PSUs only.
Okay, great, sir. And so just the second question on the Nigerian order, since the US entity is involved pretty much in it, so do you expect that the signing of the order could be delayed post the elections of the USA? And
No, there is no possibility of election. So we have met senior Exim Bank officials, senior other US officials in this regard. US Congress has committed funds of $120 billion for the Exim Bank to support renewable energy projects world over. So this kind of credit for the related to energy projects, which is available to US Exim Bank, the Congress has that support. The projects have been mandated to Exim Bank, so we don't see any impact on the projects even post elections, because it's the amount which have been already being sanctioned by the Congress.
Okay, great, sir. That's great to hear. Thank you so much.
Thank you. The next question is from the line of Karan Sanwal from Niveshaay. Please go ahead.
Yeah, hello. Hope I am audible.
Yeah, you are, please.
Yeah, thanks for the opportunity. I have two questions. Any major reason for increase in other expenses and other income this quarter?
So there is one agreement with SP Group that we have a particular cross charge to them, which has been charged in this particular quarter, and that has led to extra income. And I think further clarifications can be given by Sandeep on that.
Yeah, so the one-time non-recurring income that you have seen in the P&L that was uploaded in the investor presentation is the amount that Amit just alluded to.
Okay. And also, if the interest cost, if you could guide, how could it shape for the full year? We are obviously ramping up the execution, so we've been taking more non-fund based limit or maybe more working capital limit. So if you could guide, what will be the full year interest cost for us?
Okay. So, I had already mentioned that for the 500 crore facility that we have availed, the interest cost is 11.6%, right? Now, over and above that, we have roughly about 380 odd crores of 350 odd crores of term loans. Now, part of these will be repaid with the indemnity proceeds that we would be expecting this quarter. So, an amount to the tune of almost 109 crores is what that amount will be. So this is what at least fund-based facilities are there at the moment, and roughly around 10 to 11% is what will be the number on the interest cost for that. 11 to 12%, sorry. Yeah.
Okay, good. That's it from my side. All the very best.
Thank you. The next question is from the line of Ashish from InvesQ PMS. Please go ahead.
Yes, thank you so much. Sir, just to clarify, there was quite some discussion on this bank guarantees limitations that we had. So till now, the reason why we are stuck at 1,000 crores odd was that we had that much of limits available. Is that the right way to look at it, or there were certain other things also which constrained us from achieving our target for the last 2 quarters?
No. So, see, I mean, execution has been progressing as per plan. You should recall that, Q2 is a seasonally weaker quarter as well because of the monsoons, and just like Amit had earlier mentioned, that bulk of our execution currently happens in Khavda, right? We were expecting, and we had also guided in the earlier calls that execution will be second half heavy, which is what we are anticipating at the moment. Thankfully, we do have now the ratings upgrade in place as well, which will ease up limits for us going forward and make execution and elongate credit cycles to some extent as well. So that is another thing that will happen and help our execution apart from the availability of limits, open credit from vendors, etc., which we have already worked upon. So from at the start of the year itself, we had guided that it will be second half heavy, which is the case that is likely to happen with execution. And like Amit said, we are pretty much on track for that.
So, given we've achieved around a couple of 1,000 crores on the top line in H1, you're saying that maybe 2,000 crores in Q3 and 4,000 crores in Q4, something like that would happen in the next 2 quarters, and that's pretty heavy too, basically, for us to understand. So you're okay with those kind of numbers being achieved? Right?
No, we will not guide you to those numbers. Q3 will be much significantly better than Q2, and Q4 will be our best quarter. Beyond that, will not, because all the projects will be executed as per their execution plan and the commitments made to the client. So we will not like to delay anything. But Q3 will be a strong quarter and Q4 will be our best quarter. Beyond that, I will not like to guide you on particular numbers for any quarter. But the final guidance for the revenue remains intact.
Got it. One more thing on the notes to accounts and auditors' remarks. There's a 2,800 crores number that is there in some subsidiary. Just some clarity on that would help. What is it regarding? As in, what is the qualification of this thing? Note regarding.
Could you clarify what was the note number, please?
Note number I'll have to check, but there's an amount of 2,811 crores put in some subsidiary, and there's some remark around that, both in your notes and your entries of matter by the auditor. Some clarification would help. So that's what it is. Because the number is recently.
This would be, I think, in the standalone that you are referring to, right? Not on the console.
Yeah.
This is the loan to FZCO, which is a subsidiary. 2,800 crores. Our exposure.
Which is this?
FZCO.
Sterling Wilson Free Zone Company, which is our entity in UAE.
Okay. So it's normal business funding from the parent to the subsidiary for carrying on the business, is it?
Correct.
Okay. Yeah, and sir, anything to put remarks on the CFO exit that happened and the promoters selling and stuff? You have clarified on the promoters thing, but what's it regarding with the CFO exit in this quarter?
I think our CFO, Mr. Bahadur Dastur, has been a very valuable and long-term associate with the company. He has contributed in all the aspects of the functioning. But it's a part of, I think, one's personal aspiration, personal reasons and career growth, I think, which he has taken. He has cited as personal reason for moving ahead in his personal and professional journey. So that would like to say that he has spent quite a long time with the company, and I think as a part of his personal plan, he has chosen to move ahead, and the company highly appreciates and values his contribution to the company.
Okay. And the replacement for him right now, are we looking for outsiders or we have some plans in place?
Yes, we are working on mandate and looking for candidates from outside. Though a very strong internal team is in place, but CFO we are looking from outside, and shortlisting will be completed fairly soon, and CFO will be resuming in coming months.
Okay, thank you.
Thank you. The next question is from the line of Shubham Sheth from Jefferies Group. Please go ahead. Mr. Shubham, I would request you to unmute your line and speak, please.
Hi, am I audible?
You are.
Yeah, hi. So my first question is on margin. Pardon me if this question has been taken before. So I just want to get a sense what sort of margin profile that we have for domestic versus international EPC, similar for O&M business.
So our gross margins for domestic remains between 10 to 11%, and similar margin profile is there for international projects.
And what sort of EBITDA?
And on O&M steady state margin is around 25%.
Okay, on blended we can expect 11 to 12% on the overall.
You can expect 10 to 11% gross margins.
Okay, and EBITDA level, what can we expect?
EBITDA level, I think we are considerably improving our overhead numbers, and EBITDA will depend on that. So we can expect between 7 to 8% EBITDA number going forward, because heavy rationalization on overheads are going on, and we'll come back with exact numbers when the heavy revenue quarters will be there in next 2 quarters. We'll come back with revised estimates on EBITDA number from next quarter.
Can we expect this 7 to...
Just to clarify, so we've already indicated that overheads have, most of the rationalizations in overheads have been completed, right? So, like Amit just mentioned, gross margins are 10 to 11% in domestic, and similar for the international EPC business. For O&M, it's 25%. Now, overheads, what you have seen in Q1 and Q2 on a blended basis, I think similar numbers are likely to continue, heading back into the second half. So, depending upon obviously what your top line is, there will be, like I mentioned earlier as well, that operational leverage kick in, and therefore, given that your overheads are likely to remain at a similar level, higher revenues will lead to higher EBITDA margin as such. Yeah.
So to what level can this be upshifted?
Sorry?
So to what level can this margins can be pushed to say the north of 12-13%?
No, gross margins 10 to 11%. That is what we've indicated. So obviously EBITDA will be lower than that, right? Given that you have overheads as well.
Okay, and you see sustainability of this EBITDA margins at the level 7 to 8%.
So once we reach a steady state in terms of execution, yes, you can expect EBITDA margins to stabilize at those levels. So yeah, depending on top line.
Okay, so just a question, why is this a bit lower than what is there for the other peers which are listed? Say if I take an example of Paris Renewable, they have bit greater margins on EBITDA.
So I would like to clarify something here, because we have our own addressable market, and there are projects which are offered in the market come with land and ROW acquisition risk. We are not including that in our addressable market, and we are not executing projects because we see a great risk associated with that. So far we have not picked up those projects, and they are not part of our order pipeline. Typically, the EPC players which are taking projects with land and another associated ROW risk, they get usually higher margin, but it can lead to substantial losses as well. So as a part of risk mitigation practices or our risk metrics, we are not accepting or taking those projects. So our margins are normal EPC margin based on either BOS or turnkey projects excluding land. So that's where they are, and we are choosing our projects very selectively. So I think we are operating as best in class margins in the industry.
Sure. So do you have any hybrid project in your portfolio?
As of now, no, but we are working on standalone BESS projects, but we are working on multiple hybrid projects in India and abroad, foreign markets, international markets, so which will materialize soon. But as of now, we are working on the largest standalone BESS project in India.
And would that give any further expansion to your margin?
That depends because how the market grows, and usually the margin level are still 10 to 11% in EPC space, but we'll see how the market evolves. But as of now, the gross margins will remain 10 to 11%.
Okay. Just one last question on battery storage business. Like, how is it going and any plans on ramping up?
So market is growing. We have seen multiple bids in last few quarters, and it is going to ramp up. As you see on IPP side also, the SECI and all the NTPC, everybody is coming out with bids for BESS, standalone BESS or hybrid. So we see that market growing considerably, and it will form a good part of our portfolio in coming quarters.
Okay. So what percentage of revenue can it be in by FY20?
So on that particular part, I will not be able to give you any specific number or revenue guidance with particular to that. That depends on how many projects are floated and what is our hit rate for those particular projects. So I think as the market evolves next in a quarter or two, we'll be give you a better guidance for those particular numbers related to BESS projects.
Okay. And we can expect the similar kind of margins for this business.
Yeah, sure. You can expect either similar or better margins for those projects.
Sure. That's it from me. Thanks.
Thank you. The last question is from the line of Deepak Rao from Kuber Asset Advisor. Please go ahead.
Yeah, hi. Just wanted to get some light on this line item related to exchange differences translating in the financial statements. That seems to be there at every quarter, and as a percentage of profits and revenue, it is high. So can you throw some light on what it is? Are you controlling it, or are you having hedging strategies, etc., etc., etc.?
No, so these primarily relate to the projects in the international subsidiaries and effectively the forex differences that arise on account of those projects. There isn't necessarily any requirement as such to hedge these, but yeah, the forex differences translation that you're seeing is essentially on account of the branches and subsidiaries that we have in our international business and the project that they're executing at.
Thanks.
Thank you. Ladies and gentlemen, we will take that as the last question. I would now like to hand the conference over to Mr. Amit Jain for closing comments.
I would like to thank everybody for joining the call. For any further information, kindly get in touch with Mr. Sandeep Thomas Matthew or Strategic Growth Advisors, our investor relation advisors. Thank you once again and have a great day. Thank you.
On behalf of Sterling Wilson Renewable Energy Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.